Ryanair has always had a fraught relationship with the public. Since the Irish airline rebranded itself in the 1990s, it has gained notoriety for its poor customer service, with Michael O'Leary, the company's chief executive, widely perceived as ruthless and combative. Yet it is Europe's biggest airline, carrying 80 million passengers a year and proving that customers are still willing to buy its cheap flights.
Ryanair are a highly profitable company based really on a very distinctive positioning in the market. They have used reputation, in my view, extremely carefully by focusing very distinctively on a value proposition. And that value proposition trumps all other reputational dynamics. And they've been hugely successful.
Businesses like Ryanair have multiple reputations. As a company that has a reputation for poor customer service may not deter customers if it's seen as being the cheapest. But focusing on one strength may prove precarious, especially in the long term.
After years of success, Ryanair has hit on hard times. The airline has issued 2 profit warnings, and investors have voiced concern that the company's policies are sending customers to other low-cost rivals. It has now embarked on a charm offensive by relaxing aggressive baggage checks and slashing charges for booking errors.
Perhaps Ryanair should have read the Bard for lessons in PR. Shakespeare described reputation as the purest treasure. For companies, investing in reputation management can provide a long-term buffer against short-term crises, helping to attract customers as well as recruit and retain staff.
Bob Leaf has been working in the PR industry for more than 50 years and has advised corporations such as Coca-Cola and IBM, as well as governments around the world.
The important thing is for companies today to know the perception that all their various audiences have of them, and when it's negative, do everything possible to change it. When I started, you didn't have as much negative coverage, even in the press, than they do today. And there are too many things that have come out that make them look bad.
Malcolm Gooderham of TLG, a reputation management consultancy, says that companies are now being judged not just by what they sell, but how they produce their goods or services.
The advice we give to clients is very much to be as transparent as possible, because that is the expectation of consumers today. It's not about being responsible in one aspect of their business. They've got to be responsible across the entire footprint of the company and what they do. So I think there's been a welcome shift from the corporate philanthropy that was CSR in the 90s to something that is more sophisticated today, which is more about integrating corporate responsibility into the supply chain of the business.
And with technology transforming the way we receive information and buy products, reputation management has never been so important.
It's very important today for companies to realise that the internet affords them an opportunity to communicate directly with customers. That's particularly important in a crisis, but the expectations of consumers are very high. They want to understand how the company thinks and works, and the internet affords that opportunity, so they've got to embrace those channels, and social media is very important for that.
And it seems Ryanair has been heeding that advice of late as it attempts to change its image. The company is engaging with customers on Twitter, though when Michael O'Leary had a go, it had mixed results. Perhaps his foray provides a cautionary tale for companies. You can spend months cultivating a new PR strategy, but it only takes 140 characters to undo all your good work. Emma Jacobs, Financial Times, London.